welcome back to Chai Pe Charcha. In today's session, we are going to talk about Ukraine-Russia war impact on Indian economy. And we have our two distinguished faculty members. We request everyone to introduce themselves.
Okay, thanks Farida. I'll go first. Myself, Dr. Purnima. I'm in the field of finance since last 15 years. I have been into industry, then I went to the research world, then into academia, published papers in the area of SME financing primarily. Presently, I'm also doing research on the impact of the uncertainty primarily on the Indian markets as well as on the global markets.
Sudhi ma'am.
Yes, I'm Dr. Sudhi. I'm assistant professor in FIIB itself. I'm also a program chair in PGDM FM as well as PGDM itself. So somehow my core competencies is into financial modeling, financial econometrics, financial analytics. I have done plenty of work that is on how volatilities are there in turmoil conditions like COVID-19. I have done lots of work that is on crypto market and stock market. Definitely within this session I will share my expertise into it. Yes.
Oh, great. So we have two of our best faculty members and very ideal for this topic. So without getting into more of the technicalities, the first important question that we have to Purnima ma'am. You said that you are an avid researcher into the impact of this and you have researched about the volatility. So what do you think are the factors, and I'm talking about the macroeconomic indicators that are going to be very, very likely to fluctuate because of this war situation?
Thank you, Farida, for the question. But just one correction that I'm not researching on volatility. Primarily, I'm looking forward. See, we all, even every person in the world is looking very, very closely to the situation that is currently going on in Ukraine and Russia. Because one, it is not impacting the peace. Apart from that, it is also impacting the business at large. Being a faculty at business school, I'm also keeping a close eye to whatever the moments are happening over there. If you look at the world economy at large, see, there are several factors where we'll see independency, where we'll see dependency as well. Being globalization means whatever is happening in the one corner of the country has been somehow having some effect. Maybe a larger one or maybe a smaller one, but a spillover effect is bound to happen because of this. So due to this war, you'll see the major crisis that everybody is looking upon is on the fact of supply chain part. Because like Russia when COVID-19 came, like China when COVID-19 came is the manufacturer for the whole globe, and the economy is impacted because of the export that is being stopped from China during that particular time, and everybody has impacted because of that. Right now what is happening, Ukraine and Russia are also the exporters to many of the items, including oil and gas. People are talking about natural gas, microchips, and commodities like this, where these items are getting exported to different parts of the country, different parts of the globe. So when this kind of situation is happening, a likely impact on inflation is bound to happen. Common people like us is going to face a high price rise in the commodities due to these conditions. Though the individual government in different countries are taking effective measure to contain this kind of impact, but definitely after some point of time this is going to come. So one major concern is with respect to the supply chain that is going to affect. Second is of inflation that's going to affect. Third is the currency prices. Again,
Absolutely.
The major one that's going to impact, it is impacted right now, and the trade partners with these two countries. Because when we talk about the current account deficit, whomsoever is the trade partner with these two countries definitely have an impact on its current account deficit or current account surplus, whatever they are facing. So current account is another important indicator of balance of payments that every country is having, is going to have an impact too. Another thing, people from the reserve banks of different countries going to face the impact on their reserves with respect to the currency fluctuation that the world is going to face. So primarily a very, very tough situations for all, and we all hope that this particular situation will resolve at some point of time, or maybe people will arrive at some solution. Because majorly, and one more thing, apart from US, Russia also supply major oil and gas to the
Absolutely.
European countries. So when the sanctions are coming from the US, okay, so and if then whole pressure will go to US, right, in order to supply natural gas to the European countries, and US alone cannot fulfill all these
the
things.
requirement.
So there is some kind of midway these countries need to sort out to solve this problem, and it needs a moderate solution in the immediate term, because short term looks very much volatile with respect to the global economic outlook.
Thank you very much, ma'am. This was indeed insightful. And to add upon, Ukraine is the largest world producer of sunflower oil, and Russia is at the number 2 position. So the inflation, the right hit on the inflation, the crude prices are inflated because of the disrupted supply chain. Ma'am, we looked into the global aspect, we looked at the macroeconomic factors. Talking about Indian stock market, where your expertise lies into, we saw a turmoil. We saw that the moment this kind of catastrophic, which the World Bank has defined this Ukraine-Russia war as a catastrophic, the stock market just had a major hit. People in the time of pandemic have realized the importance of secondary source of income, and in India, COVID has taught us that stock market supplements that secondary source of income. So you being a finance faculty and your interest area into studying these volatility and the stock market fluctuations, what are your recommendations? Where do you see a future here?
Yes, Farida, thank you. Very important question, because somehow most of our people who are watching this video must be investing in stock market, since I am also an active trader in stock market. If I'm talking about impact of this war in Indian stock market, definitely I will not directly hit Indian stock market, because we can't talk about Indian stock market in silos. We have to think, rightly said by Purnima ma'am, that we have to think about at a broader level. So somehow empirical studies has shown that Indian economy as an emerging market is a major, it's a receiver of volatilities, and the developed market is a major transmitters of volatilities, net volatilities. Okay. So somehow, if I'm talking about Indian market, I definitely talk about the developed market first. So because since I'm a trader, active trader, I will always look at US data first before put any trade in Indian stock market. If there is a bearish trend, definitely I will look at macro level what exactly it has happened. So in Indian stock market, it is nothing that bearish trend is right now the stock market is facing just because of Russia-Ukraine crisis. You can see this bearish trend is coming from October 2021 onwards. Now, as an active trader, I want to first of all highlight that what are the basic reason behind that and the macro front. So in order to capture the macro picture, what I am taking into consideration of the developed market, I had seen the picture from the MSCI developed index. Okay. That is a true proxy of the developed market itself. It is taking care of 23 developed countries, and it has been divided into basically America. Majority of the chunk weightage has been given to American Stock Exchange, that is Nasdaq Composite Index or Dow Jones. So, and the next chunk that is of European and East region, and the third chunk that is of Pacific region. So
you meant, ma'am, that while we are investing into stock market, it is not necessary to look at the Sensex and the Nifty, but have a holistic overview and check the other indices across the globe to have a macro level impact.
Yes, so I will give you one reason behind this. What is the repulsive effect that is in Indian market? Why it has happened in Indian stock market from October onwards? So basically what happened, I had derived this particular question. I had gone to this particular data set, and I found that since developed market, the major chunk that is of US stock market, if I'm talking about Nasdaq, I had seen what exactly the trend that has been drawn from the world index, MSCI world index and Nasdaq index. The same pattern has been drawn from the world index itself. There is a complete parity in between the pattern. So what happened in the world index, you had found that there is a bearish rally from December 2021 onwards. Now the reason is what happened with the world index, that you must heard about this particular news that the US economy, in fact the world economy, is right now facing inflation,
absolutely.
so if you will compare from October onwards, 4.6% inflation has been increased till 6.4% inflation. So somehow it's a big hit on US economy.
Yes.
So if the cost of production has been increased, definitely there is an inverse relationship with the market, stock market itself. And right now what happened, this hit is not only because of this macroeconomic variable. If we had taken the past data, the COVID-19 has given, the outbreak has given the complete a sharp hit in the developed market.
Absolutely.
So somehow, but there is a, after this hit, you will find after 20th March approx 2020, you had perceived a sharp recovery in that particular bearish trend.
We were actually back at the square last year. If you look at 2021 data, the Sensex had actually recovered back to its original position with a spike in it. And with this, war-like situation, again the market has collapsed. So we really need to look at the macro indicators and study globally before we start investing into. So, ma'am, if you can help us know what are the major picks here when you look at this kind of situation, which is
Farida, I just want to add on this, that these are the macro vulnerabilities that is right now going on, and the same repulsive effect that is coming in emerging in general as well as Indian stock market in particular. Okay, and this Russia and Ukraine crisis, as ma'am rightly said, it has increased the further commodity prices like wheat, aluminium, copper and sunflower, you rightly said, and the crude prices had shooted, it surpassed around $120 per barrel. The wheat has surpassed around 420 per ounce. So somehow these numbers had further increased the volatility. It's fueled up the volatility what exactly persists in Indian market. So the bearish rally we are actually facing at this point of time. But several researchers has previously done that whenever the war encountered, it's around, most probably it's around 20 to 30 days, that is a close watch period. After that, ma'am, there is a sharp recovery. In fact, you can see that same thing happened in COVID-19. The emerging market, they had taken a sharp recovery in their pattern. So as an analyst, I am looking for that recovery. And as far as the top picks, you are saying that I had taken up this particular opportunity at that time period, and I had taken up banking sector because at that time banking sector at its all-time low if you are compared from the last 3 years valuation. So somehow I had picked up one of the very good, one of my favorite stock, that is HDFC. I had taken up this for Axis Bank too. I had taken up at that time, and IGL is at all-time low, so I had taken up IGL too. I had entered into that one because of connection with natural gas, because the cost hit very well. So somehow IGL prices went pretty well, so I had taken up that one. So these are the picks that I had taken I had included in my portfolio.
That's impressive, ma'am. In fact, this is one good lesson that we should learn, that the war-like situation will turn around in our benefit if we are focusing on a secondary income, and if we can do a little bit research into some sectorial, we can identify some good picks. And right, ma'am said, banking and oil, all those companies which are related to oil and natural gas are the major picks here, because we're likely to foresee a a spike in these prices. One last question to the panelist. I'd recently read in the newspaper that the Bank of Japan as well as the other banks are having a relook on their GDP growth rate. And do you think it's time for India, because we just announced the GDP growth rate, a very promising number was portrayed by Nirmala Sitharaman in our union budget. Most of the countries are now on a verge of relooking at the GDP growth rate. Switzerland, Bank of Japan has looked into it, Hong Kong has looked into it. Do you think it's the right time to relook at our GDP growth rate?
Farida, if you have recently heard the news that RBI has passed out its statement about the GDP growth rate for this quarter is 5.4%, or they are expecting, and they are expecting a very sharp recovery of Indian GDP. So relooking at the growth rate, I'll say that RBI do this exercise on a quarterly basis. They always receive these kind of estimates about the GDP growth rate, and by the other firms as well who are doing research into that aspect. Moreover, if you look at from the Indian economy perspective, overall this situation, there are four things that you look upon. One is obviously about the trade. That's going on between India and Russia, India and Ukraine. So good news for us is like this, that in fact tomorrow only, I've read in today's newspaper only, that India and Russia have agreed on certain deal. That earlier the oil gas companies have said no because of the US sanctions.
Right.
But recently, maybe by yesterday only, they have agreed on the fact that they are agreed to send the oil gas containers to the COF, the FOB basis, So insurance risk is on the part of the Russia itself.
Right.
So that's a big news for us. And if you look at the crude oil prices, it is below 100 per barrel.
Right. We've been expecting
It's like $99 per barrel.
97.
97 or $99 per barrel. Today's newspaper is predicting that. One good news. So even the oil and gas companies which are worried because of the highly surge in the petroleum and the oil gas prices, people have taken a sigh of relief. And for India, maybe we'll able to control the inflation
to a larger extent.
Ma'am, adding to it that right now the RBI, despite of that US is right now increasing its, in the month of
rate.
March, it will increase its Fed rate, that is 7 times.
which is very unlikely for
And
developed
right
market.
now the Indian economy, it is taking an accommodative policy. They have not increased their
And
interest.
one more thing which is coming up, like ma'am told that in COVID-19 banking sector were at low. And if you look at Ukraine and Russia war condition, we in the banking sector in India, it's highly resilient. If you look at GFC crisis, at that point of time, we have shadowed our country with the kind of stringent banking policy that the country has adopted. Today itself also, if you look at the situation with respect to banking sector point of view, here also we are very, very in a good shape. Like banking sector is much resilient to the situation that is happening outside. So one impact that is likely to come for sure on trade, wherever we are trading with Russia and Ukraine. And the ultimate impact that going to come over here is on the CAD. That's current account deficit of India is definitely going to increase because we are more dependent on Russia for imports. India is much dependent on the other countries for its oil imports, and Russia is one of its partner for that. And for export, Russia is our, I believe, 25th export partner. So exports are not likely to impact much, but definitely if we are much relying on the country for imports, our current account deficits are going to be massive. Banking sector much in resilient shape, not to worry about. Government of India, in fact, obviously the RBI governor has shown his faith into the good growth of the Indian economy. Third is corporates. Corporates are also likely to take benefit out of this kind of situation that is emerging, right, with various business proposals coming up from there, and they have taken good investments into this kind of things as well. Even in financial markets, they have invested their money, and if you look at this period, Indian corporates are able to raise billions of dollars from the corporate markets itself, from the equity markets itself. So overall, obviously, people are looking very closely to whatever going over there, what are the talks going on, how it's going to contain, what are the sanctions are being proposed, what is going to happen in the NATO meet where President Biden is also supposed to come.
Correct.
And so yes, with China entering into this situation,
Right.
maybe this take a different, altogether a different angle. We don't know that, but yes, a close watch is necessary. Right now, good news for us. We are in a better position. Our
Right.
government is taking all prominent measures for it, and for investment, ma'am has given all tips for it.
Right.
So, but yes, a close watch is necessary, and we should all pray that this situation is not good for everybody, right?
Right.
If it continues for too long. But short-term outlook for any economy all over the world is not an exponential growth, because after COVID we all are expecting
On a
that this
recovery mode.
growth
We
will
are
come.
all on the recovery
And in
mode.
finance and economics we call it base effect. Because earlier at this point of time we were
this
at
is just
negative,
the basic
right?
point of
And with this promising growth rate, the base effect will automatically give rise to exponential growth, right? But with this situation coming up, definitely short-term outlook is not that promising as it has to be. But for a longer term, or in fact even for a medium term, growth is bound to be here. So yeah, that's all from my side.
Thank you for joining us today. We will have such more insightful session on Chai Pe Charcha again. Thank you.